It is the morning of the 5th of November. So we have on the dollar index finally got a pattern to look at. On the weekly chart, we have a year-long wedge pattern, which, as you can see, held last week when we topped out before the trend line, about 25 pips before the trend line. So we've got support, well, we've got resistance. Let's go back to that trend line. We've got resistance around 97.50, and we've got support around 95, 96.00, 95.90. So that's the area to watch. I know it's quite a big area, but that's what we've got on the weekly chart. If we break below sort of 95.50, we're probably headed down to 95.20, 95.10, and that would be the buying opportunity. Unfortunately, on the shorter term charts, there isn't really much on, for the shorter term levels. If anything, they do back up what I've seen on the weekly chart, in that the low 95 area has got a lot of moving average action going on there, so there's good support there. There's also a short-term 61.8% fib. So 95.20, 95.10 really should be a great buying opportunity if we slide this week, but we're going to have to slide over 100, nearly 150 points from where we are now, so I'm not saying that that will happen. That short-term 200 week moving average down around the 95.90 area has acted as support on Friday, so who knows, maybe we'll bounce back to 97.20, maybe even get up to 97.50, which in theory we should be shorting, because of course that's the upper trend line for the wedge. So not very tight levels for scalpers, but those are the big levels that I'd be looking for in the dollar index. Australian dollar had a huge rally on Thursday, which took us up to the trend line, which goes back to whatever month this is. Where are we now? February of 2018. Yeah. As you can see, it was just one day. I don't really know why the dollar collapsed that day. I haven't been able to find a good reason. But Thursday and Friday we had a good run up to the trend line and the 100-day moving average. Now I had a selling opportunity up around the 100-day moving average and the fibs up around 72.70, 72.80, which unfortunately we just missed. So the market reversed before getting there. If we get anywhere near 72.70, 72.80 today, this week, I think that would be a good selling opportunity. But we're being held by the trend line going back to February, as you can see here. Not a bullish candle, not what you'd want to see on Friday after the big blue candle on Thursday. So this shooting star certainly is not positive, and I don't think this is the start of a bull trend for the Australian dollar, but I'll have to review that again. If we start breaking up above 73.00, then we could be on for a beginning of a decent bull run. Until then, I remain bearish. New Zealand dollar was a little bit irritating on Friday. I had a sell around around 66.60, 66.50. Now it spiked up to 66.89, and as you can see, came back quickly. So that was just enough to squeeze some shorts out. Irritating. I still maintain that this is an important resistance level, and already today we've topped out at 66.63. So any return to that 66.50, 60 area, I do think it is worth a short. We'll have to have a stop above 90 just to give ourselves a bit of room, because obviously we don't want to retest that high and get stopped out again. But I do think eventually, now that we weren't oversold, but we're heading into overbought territory in a bear trend, so it's as good an excuse to sell it as anything. And then maybe we'll come back down to sort of the 65.80, 65.70 area. Clearly, we'll have to break above, what's this high here for September? Okay, through 67.00, then I'm going to have to start thinking about turning bullish for this pair. But until that happens, outlook is negative. Just have a quick look at the weekly chart. Nothing going on. Nope, nothing I can say other than you can clearly see from this that we're in a negative trend for most of this year. And I think this is a consolidation phase. I don't see this as a bottoming pattern. Dollar yen chart is pretty messy to me. Certainly on a day-to-day basis. Looking at the daily chart, okay, we are in a bull trend and we have been since March. Fair enough. We stick with the bull trend. We broke this trend line here, which goes back to March, but we did hold the moving averages, the 100 and the 500-day moving averages, the week before last. So then we took off again. Now, we've got trend line support down here around the mid 112 area, which we managed to hold just above on the Friday. And then we, so yeah, I mean, look, it looks positive. It's messy because I don't like the way, you go up for a day or two, down for a day or two, and that's certainly been the pattern for the last 3 weeks after we had this small correction down to the trend line. The trend line worked really well at that time. We were buying it around there. But anyway, we've got to stick with the bulls. I think that's all I can really say. Unless we break below sort of 112.40, that could take us down to this support area around 111.70, 111.50. And that really would have to hold. If we start breaking below 111.20, that's going to be a problem. So those are the levels I'm looking for. But as I say, we've got to stick with the bull trend for now. We're not particularly overbought, so there's no reason why that cannot continue. Euro versus the US dollar. Right. We bottomed at the August low last week and had a really good recovery over 100 pips, I think it was. If you were buying down there at what I had was the most important support of the week, then I'm assuming you did quite well on that. Now, we didn't follow through on Friday the way we should have done after a big blue candle like that. The double bottom's still intact. For some reason, I don't trust it. I think that we're going to break down, but I can't. That's just a guess, so you don't trade off that right now, but let's watch what happens during the week. For some reason, I just don't think this will hold, but that's a hunch rather than anything I'm getting from the chart, except for the fact that Friday's candle certainly was not bullish in any way, not what you'd be looking for to continue the double bottom recovery. Again, spike higher, red body candle in the lower half of the candle, not what you're looking for really. We've eased oversold conditions, so there's no reason we can't turn lower now. For this week, I think the 4-hour chart is actually the most relevant chart. You can see we've got a descending trend, a descending channel, which is obvious from recent price action, and you can see that we topped at the trend line and the 100 period moving average on the 4-hour chart on Friday. That's what held us. So, the question, so looking at the 4-hour chart, obviously the outlook is negative. I've got that double bottom in the back of my head, but for some reason I just don't trust it. That's all I can say really. So watch for a retest of the low around 113.00, and obviously a break below there starts the new leg lower. If we break above Friday's high, that's clearly going to be positive because we've got through the trend line that I just showed you on the 4-hour chart and the 100 period moving average. And then really we could be headed up to sort of the mid 115 area. Looking at that weekly chart, that would be a good target. So yeah, a break above Friday's high, which was 114.56, could take us up another 100 pips without too much trouble. Certainly we could be testing the 500-day moving average at 115.30. So there's some scope for some moves, some bigger moves than these fiddly little 20 pip, 30 pip moves we've been having sometimes, spending hours in 20, 30 pip movements. I've got a feeling we're going to get some volatility back. I'm hoping so. The Canadian dollar versus the US dollar, or actually the US dollar versus the Canadian dollar, I should say. This chart is a mess, and it has been for a while. I've spent a long time trying to decipher this one, and I just can't. The moving averages are all moving sideways. They're all converging, really. We've just done nothing in particular for months. I'm going to leave it. I have no idea what's going on there. So gold was stuck. Gold could not get through the 38.2% fib at 12.38. We were selling it up around the mid to high 12.30 area. That's worked okay, apart from the one day when we spiked up to 12.43. But otherwise, that resistance has worked really, really well. We didn't quite get down to where I would have liked to have bought it, around the sort of 12.10 area. We didn't quite reach that. I think it was 12.11. Yeah, 12.11.5 last week. A little bit frustrating. But you can see why that's a good support level. We've got the 23.6% fib. We've got the trend line from these peaks around the end of August and through September. We've even got the 55-day moving average down there. So that's why I think that's a good level. Break below 1200 certainly would be negative. We've got this resistance up in the mid to high 1230 area, which is working. And a break above last month's high at 1243 should set us up for a move, well, maybe even as high as 1260. That's all I can tell you really. Let's just have a quick look at the weekly chart. Not much going. Oh yeah, you can see we've got the 200 week moving average. Again, that's around 1235, so it is acting as a barrier on a weekly closing basis at least, and we are a little bit overbought on the weekly chart, but I wouldn't pay too much attention to that right now. Yeah, we'll just have to see which way it breaks. It's in a big consolidation phase, but actually scalping the levels has worked, so we can't complain about that. Silver was pretty good up until last week. Got a bit tricky. We had some volatility, but difficult to take advantage of that volatility. The support level at 1420 certainly worked, and then we rocketed up to the resistance at 1475, 1475. But then a bit stumped on Friday when we pushed up through the trend line in what looked like a breakout, only to be dragged back within that trend line and the usual resistances. So bulls are going to need to see a sustained break above 1475 if they are to get anywhere, and test the 100-day moving average around 1495. And clearly that's going to be a problem. We're going to have to then obviously move through there if we're going to get up to 1520. Those are the levels to watch for in silver. On the downside, in theory, 1450 should be a level. I'm not sure I trust it. 1450, 1440, and then down at 1420. So oil has broken lower. You can see we consolidated nicely above the trend line from the June low to the August low. That really did work the week before last, but we couldn't get back up through the 200-day moving average. So those scalping levels were fine, actually. We did all right with that, I think, if I remember correctly. Now, once we broke down through the sort of 64.90 area, it was clear that support had broken, and then we've been down for the last two sessions, and I think we'll probably continue lower this week. There's certainly no reason why we shouldn't test the April low at 61.80. That would be the next target. We've got the 50% fib at 61.20, 61.30. So those are what I'm looking for this week. If we get any bounce, we've clearly got resistance around 6,500, 6,550. That would certainly should cause us problems, and it should be worth selling in that area. We are a little bit oversold, but we could stay in oversold territory for longer, so I don't see that as a buy signal.